Good morning, everybody. This is Dee Dee with Power 3 Trading. Thanks for joining. I'm not here just to teach you the strat, but to teach you how to execute and profit from the strat techniques. If you have more questions regarding the strat, please reach out to my guy, Rob Smith, at Smith's in the Black channel, Rob in the Black on Twitter, or at cpagroup.com. And of course, you can reach me on Twitter at R3DPepsi. So yesterday, we had a couple trades on our list. One was Target and the other one was Tesla. So we're going to go over those today. Let's just start here really quickly with Target. We drew our broadening formations. Let's go here. We drew our broadening formations based on our 90-minute, I believe. Yes. On our 90-minute time frame. And so let me show you. This looks a little off. Not sure what happened there, but I'll try to find it. So we drew our broadening formations based on the 90-minute time frame. So we knew Target was a gapper, right, based on pre-market action. And so we drew our broadening formations. And why do these all look off, guys? Something got moved around. Okay, so we did this on the daily. That may be why. Let's look at this. Hard to see. Let me blow it up because I think we had to go back a ways. Yeah, that's what happened. Okay, all right. I knew it was something a little odd. All right, we had to go back a ways because we talked about yesterday's video that Target was going to trade below yesterday's, when it gapped down, if it was going to trade lower, it had to take this gap. And so we drew the horizontal lines here at the high of this gapper, the low of this gap, not gapper, but the high of this range, the low of this range, so that we could see the distance between the gap here, okay? And then we drew this broadening formation from that day back to this daily range, this low. So what we're looking at for those two down bars on the daily, because price was trading inside this range, so we wanted to capture that. This guy was 149, and let me go back to, it's off because I remember now what I did with that was I said when we met, price needed to trade above this guy here. And so that was, that's 153, where was I? Here. So what I said was price needed to trade above this outside bar. So this is off just because what I did was I just wanted to show it at 149. I said, when we met yesterday, I said I wanted to see price trade above 148.33. And I just randomly made a call there at 149 because I wanted it to be, I just rounded up. I wanted it to be above this outside bar, looking for a 3-2 continuation. So that's where that came in at, okay? And so we're gonna play it so we can see. We're gonna do a replay on this so we can see what happened. So just keep in mind this 149 was really this range here. I wanted it to trade above 148.33. And if we were to move that here, you can see right where the low was 148.43. This is 148.33, guys. But I had to line up here, so we can leave it. It doesn't matter. I'll put it back at 149 because I wanted it to trade above that range for me to go long. And you can see that somewhere in my comment. Yes. All right, so we wanted to go long. So this was our note here. We wanted to go long above 149 with CCI crossing above -118 minutes. That did not happen, so I'll show you what I did. and a continuation crossing zero. That didn't happen over here until here, but we can see where it crossed over here on my lower time frame, which is where I entered. And then we wanted to go short below 145. That never happened, right? So we wanted to go short below this range here. And so that didn't happen. So now you have to think about it, right? You have the open. I'm going to replay this, guys, and we're just going to talk through it. All right, market opens. And you guys know I don't like to enter a trade before the first 18 minutes, especially on these gappers, but this is what Target did. All right. First 12 minutes. Okay, so here's what I'm looking at. I said, Target is gapped down, nice gapper. It put in this low here. So this is a 2 down. This is a 2 up. Right? So that would technically be a compound 3 on a shorter time frame. But I stuck with my rules. It traded down, crossed back above my level here. Guys, you absolutely, if you understand how to trade, and I'm sharing this because broad informations are the key. If you understand how to trade on these shorter time frames, and you're one of those sniper types, you can get in, get out, you can take this trade 2 down, 2 up above our broadening formation, because that's where we wanted to go long. We set at 149. It traded back above this, held it, okay? You could have done that and said, if price trades back below 149, I'm out. So you absolutely could have taken that price held. I didn't, because I also follow my CCI rules. But if you're listening to my video and you're practicing how to draw those broad formations and using your reversal patterns to get into this trade, this is a 2 down, 2 up, crossing back into our buy zone. You could have taken that and just put in a tight stop, okay? Now it hits this level here of the broad information that we drew, right? Now you ask yourself, so we drew this here, right? So we know we want price to trade above this 2 up bar here. It did that, guys. Let's replay it. And so here's where I saw this. So it hit that level, right? So this was this broad information we drew here, because we knew if we're going to trade above this range, this was going to be our next target, right? That's what we talked about. We said if price will close here, right, trades above this range, this will be our next target. I saw this here, and so here's what I'm looking for. Once I saw this crossover, I'm looking for a TTO, right? And you can see this and visually, and then I say, this did a TTO on the 1 minute time frame. Guys, this is a 3 minute. I can't go to the 1 minute. So I was like, still 2 up. So here's what you have: a 2 down, a 2 up, a 2 up, a 2 up, a 2 up, a 2 up. So I'm looking for my 2 down or inside on that 3 for me to take this entry, but I didn't get it. And I was like, so I held patience. Let's play it. All right, so now it hits this level, okay? Now, if you recall, I said, if this goes, because this was an outside bar here on the 90, right? I said, if this goes 3, 2, 2 to the upside, this is gonna continue, try to take out this range. Okay, what does it do? It's still going, guys. We finally get to a place where we get a little bit of pullback, but now I'm good. So I'm saying I'm good. Now I know prices close this range. So we're now trading up above this range here on our 90, right? So it's trading up above here I'm looking for it to take this guy. So I know I want to get in. Now it's a matter of when. So when I get this move here, I'm feeling pretty good. And I'm talking to myself. I'm in this range. Because remember, this was a 2 down, 2 up on the 18. So this was the new 18-minute candle. And I'm like, come on, you got to give me a TTO at some point. CCI still hasn't crossed above negative 100. But now I'm looking at this and saying, maybe it will reverse. So I'm holding. And this is what you have to say to yourself. You got to start talking to yourself, guys. Start talking to yourself. Hold. Let's see if it breaks back below here. And again, your 90-minute is big green. So it starts to trade below this level here. This is this top of the hour. Okay, so this is a 10:06. This was at 10 o'clock right here. So now your 30-minute is closed. Price is coming back inside. What's your next 2? And that's where you have to ask yourself, is this going to be a 2-2 continuation? So it comes in, tests this level here. But remember, you're at a big green 90-minute candle. So I'm not looking to short this. I'm just looking for price to pause, do a little consolidation, if you will, before we see what the next move is. Because I can't short this until this 90-minute flip, because I'm way up here on this on the day, right? It opened here at 148, guys. Now you're trading way up here. You're at 154. Yeah, probably not going to take that red inside this 90-minute while this 90 is still forming. So you're just waiting for your entry to go long. And that's why I said, if you're on the 1-minute chart, this is my guy, James. Yeah, you're probably going to take that. I didn't. I just said, you know what? I got this crossover. I know I'm looking to go long. 18-minute. I know I'm looking to go long. It's just a matter of when. And this is where I finally got my opportunity. It traded 3-2 up, and now I'm getting my cross. I'm trading inside this range here off of this outside bar. It looks a little like an inverted hammer. I'm going to take this and I'm going to use this broadening formation as my stop loss. So I'm basically risking, so I took the high of this guy, the 153.97, and let's say this is about 153. So I'm going to take that dollar risk on target. That's a lot for this particular stop, but I'm willing to take that risk. I may even get out earlier though. And let me just show you what I mean by that. So maybe I don't let it come all the way down because this is an outside bar. Okay. You can do this and say, okay, if it comes back in here, just go ahead and get out. This is an outside bar, so I can draw that broad information there, right? And so I'm looking at that and I'm saying, okay, we're going to continue. Let's see if this holds. It does hold. And now I'm looking for it to take this out, right? This was our broad information we drew from some level here. I have to go back and see where we drew that. All right, so we're still good. Now it hits that upper range. So I'm thinking maybe we can continue this, maybe not. Let me see where I drew that. Because then I got out once it came back across here. I exited this position. CCI is back below 100. So I took profit there. Let me pause here. Hang on one second, because we're in, pause. Let me tell you where we drew this. Okay, so we drew this here because if I can recall correctly, what a difference a day makes. We drew this broad information off these outside bars. And I think what I recall saying was when we were looking at this range here, I said we got this outside bar here, I was looking at price action to take this. So again, outside 3, we had this 2 down, and we said, okay, if price trades above here, right, we're looking to take this range. So I drew this broad information from this outside bar to this outside bar. That's how we got there, guys. And I can tell you that I know it's not easy. My brain has just been programmed now for doing it for so long. And you can see it traded up to that range. And you're like, oh my gosh, Didi, how'd you get there? But you have to remember, we were down here in our planning. We were looking at this 3-2 that was on May 20th. And we drew our broadening formation there. Could we have done it here? Let me see, instead of going that far back, maybe we could have done it there. Let's just look. And yeah, yeah, it would have yielded the same results, looks like, right? It would have yielded the same results if we had done it here off of this 2 up bar, 2 down bar. But I drew it, yeah, I drew it here off of this outside bar. But we could have done it here as well, okay? All right, so here's where I went, here's where, oh, so where's that coming from? All right, so that's this guy. I'm just gonna delete this here, okay? All right, so here's where I went short off the 90-minute flip. All right, so I missed all of this, guys, because it just didn't meet my criteria. And that happens. Sometimes you'll get some choppiness coming back into after a gapper, and then you'll see these crosses more definitively after a 2-2 or after a 30-minute. But gosh, this didn't happen till way up here. But I took a risk and I said, I'm going to take this short at the 11 o'clock flip because, again, CCI is still below -100 on the 90, still in my red zone, but trending up. So I took this here at the 11 o'clock flip, right? At this 3-2, 2, crossing back down. You had this 2 up, 2 down here. So this is the 11 o'clock flip. And so I took this and I was going to make this, my stop loss would be the top of that range. Let me just delete this here so we can see our original. So this would be the top of that range. And so I took that short. And now this becomes my target. But we did all of this through pre-planning, guys. You have an idea of where you're going to go long. You have an idea of where you're going to go short. And you look for those opportunities. If you wait until after the market open, for me anyway, you don't have a signal here on the 18. Maybe there's a signal on the 15. Let's take a look at that. But if you're trading off of a 18 or 15, then you can wait for your signal here. So if you look at that, all right, so that's going to hit my target here and then trade back up, and I am out of that position once that thing starts to flip back up. But let me just share something with you here. Let's just stop this. And because I was out after price traded back below my target and traded back up, I was out of this position. But here's what I want to share with you. You can do this, guys, because you can trade the 15. I just prefer the 18. And here's what I want you to see. Here is your 15-minute flip. And guess what, guys? It's crossing over right here. So you could have taken that here, and I essentially entered it here right before the 15-minute flip. But you can see where it turned green right here. The open was 153.95. 153.97. I took the high of this. Now I'm visualizing, but here is where, if you're trading off this inside bar, you take you take this trade right here, 15-minute turns green. You get in right before the flip. A little risky, but given that we're using this as our stop loss, I'm taking this with the expectation price is going to continue. It's not reversing in this candle. I'm not reversing this in this candle. And here's where I think sometimes we get tricked. When you're looking at these time frames, you're thinking, I'm going to scalp this, I'm going to take this short and get triangled out, only for this to continue. And then here, right at the top of the hour, you can see where you could short this. Okay, right off that inside bar. Now here, though, will get you into trouble. Here, you're at the top of a range. So we're just focusing on these inside bars, guys, because this is where a lot of folks take their entries. And I do the same as well. So we had an inside 15. This is what you're looking for. You want to take this entry, but you've drawn your broadening formation. So you know that if price is going to go short here, you have to trade back below this range, but your big green candle on the 90 would suggest this is not a short. You want to wait for that 90-minute to close. Here is your 60 flip. This is where some may think this is a continuation. You get 15 minutes here, price goes inside. You're not sure what to do next. So it's just a different way of looking at it, right? So I like the 90 because it helps me to avoid getting into those positions. 90 is also top of the hour, right? So if you're on a 30, you just get a different view. So I prefer the 90-minute flip. So now you're seeing this. You got this potential shooter here, right? And so if you're on the 60, maybe you're entering here and you think this is going to go, and then in the next candle it comes right back down, it triangles you out. This may be too late, guys. This may be too late. So this is where understanding your broadening formations, you can make a decision, which is what I did here. I said, it's already hit this range. Don't have my crossover yet. I need that TTO because this gives you a better risk reward. If you're waiting to get into these positions up here and then it hits your broadening formation, you can expect probably a TTO at some point, okay? So just be careful with that. What I like to do, I keep it on the 90 because it gives me a good visual. I'm not gonna short here. I know that's 3 30-minute candles. I can visualize that, but if you need to have multiple time frames or more time frames like the 30, 60 on your charts, do that until you can start to see this clearly. But I know what time frame I'm in. I know this is the 10:4. This is near the bottom of the hour flip, right? 10:24. I can see that just by hovering over. I know what time it is, right? I know this is going to be my broadening formation. And once the 90-minute flip turns, that's what I'm looking for. Is there an opportunity? And here is where you have to ask yourself, you got this inside bar, guys. If you're waiting here to get into that trade, you have to ask yourself, is that going to continue? So let's say you got in, you waited, and you're thinking this is going to continue to the short side. Well, I've already drawn my broadening formation. So just like I said, if they go up, I'm going to go long, right? Crossing above these ranges. And I say, if they trade short, trade back below, I'm looking to go short. But you don't want to wait till it gets to that next broadening formation. You want to take it off the top of your broadening formation. Once this thing flips, You want to take it off the top of that range. That way, if it continues, you're in a great position. And if it doesn't, you don't get triangled out and immediately lose money. So taking off these inside bars here, you have to, and you can, take the risk. But as soon as this thing stalls out, and you can see that here at 12:12, so you have to think about time. This is 12:12. What's my next flip, guys? 12:30. We talk about this all the time. That 3-hour flip is powerful. So at 12:30, you only have, at 12:12. This is the last 18 minutes in that 3-hour flip, right? So if we just move this over here, this is what you're seeing. This is what you're seeing. And so if you think this is going to go all the way back and take this candle red, it certainly can happen, but just understand that this is a higher risk trade because you're getting it right here at the bottom, right the last 15, 18 minutes of this 3-hour candle. Guys, it just didn't happen for us. All right, so you take your shorts, or in this case, you take your shorts at the top of the broadening formation. Use this as your target. If it fails or stops, reverses here, you get out. You get you a small profit and keep moving. Now you're in your 3-hour flip, okay? But you're inside this range. I was done with Tesla. I'm sorry, with Target, because you're now inside this 90. I don't like trading inside 90s. I tell you, the best opportunity to get these is right at the 90 flip, if there's an opportunity. Once it starts stalling out in that 90-minute range, you want to get out of those trades and just stay away. Now you're inside this big 3-hour move. So I'm done with that. It didn't cross over 0 until here. So there was an opportunity at the 2 o'clock hour. This was after the 4-hour flip, but I didn't trade that. Okay. Let's look at, let's see. Good morning. Let's look at Tesla. And let's talk about that real quick. Here, I had a bad trade early and recovered, but let me tell you, it looked exactly, not exactly, but it looked similar to the trade yesterday, but this morning, yesterday morning, and I can tell you the difference between the two and why it, I probably should have stayed away from it, but why I entered it. Okay, so Tesla, again, we drew our broadening formations on Tesla. Let's see if we can blow this up. I think we did on the 90. All right, so we drew our broadening formation off Tesla because Tesla was gapping down as well. And so what we knew was if Tesla was 700 is a key level for Tesla. And we wanted to see if Tesla was going to trade below this range. So it was already trading lower in pre-market. So it was gapping down, but lower than the previous close, right? So we drew our broadening formations and we said, okay, it's got to take this day, the low of the day. So we took the low of that day, right? We said it also had to take this low. This is the low of this day. So we took the low of that day. Because it's inside this range, guys, which is why we drew our broadening formations back to this 2 up, this 2 down. Because we said we want to stay away because this was going to be choppy, right? So, and I'll tell you how it got me. And then we drew this broadening formation here, right? Because what we were looking for is if Tesla was going to go lower, it had to trade below this range. So lower, 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 lower. We needed Tesla to take out this entire range here. We could have just eliminate these lines altogether because we knew it was inside this range. So we had a 3, 2 up. We want Tesla to trade 2 down. That means it's got to go lower than this range. So we drew our broadening formation from this 2 up candle to this outside bar. That's this range, guys. The low here was 693.10. It traded down to 690.28. Our next level was around 680. So again, 3, 2, we said if it was going to go lower, it had to trade lower than this range and then take this guy out. So those were our broad informations to the short side. We had to get outside of this entire area. This is choppy, big outside bars here, guys. So that's what we were looking at. So we were playing this to the short side if price traded lower than this range. It did not do it. It gapped down, guys, put in that low and came right back up. So here is what I want you to understand. When we're trading these gappers, when they put in these lows and then we get our crosses or price looks like it's trading up, here's where I made my mistake. And what I will share with you is that once we get these crosses on the shorter time frame and they trade back up, they don't cross back down, you're probably in your low and vice versa, high of the days once these guys cross back over, and then you see your CCI at the top of the hour going longer. So here's what I did. So I was patient. I was like, it gapped up, hit the top of this range here, right? A little hard to see. Hit the top of this range, gap down, hit the top of this range, trade it down in that first 3 minutes, hit our level, went inside, came back up, but this is Tesla, guys, don't like Tesla. Crossed over here, there was a potential, thought about it, because now the 90 is turned green, but my CCI is still well below -100 on my 18. So I hold to my CCI because this is what can potentially happen. Now, this didn't happen with Target, but you have to understand the companies you're trading, which is why I hold off on my moves, because you just don't know, right? You just don't know. Target was a big gap or Tesla was not. So psychologically, I have to say to myself, is this going to continue? I don't know. So to avoid that, I just wait. I just wait for a CCI to make its move. So it did here, right? But now I'm in a 2 down, 2 up situation. That's not too different from this 2 up, close red, 2 down situation. So if you were with me yesterday, you heard me say, this is a compound 3. Now here was the mistake that I made, because I'm still looking for maybe Tesla to go short because it never crossed back over -100, but it did here. So I saw this guy, this 2 up. Here's my 18-minute flip. It turns red. It takes Tesla, the 90, and turns red. So I enter my position. So you can see that my yellow line here, this is the TO, that's today's open. So that was yesterday's open. I enter the position here. I hold. It comes down, hits this range. So this other broad information takes this 2 down. So I'm thinking, okay, maybe. Goes inside here, guys, come right back up. I exit the position immediately. Was not a good trade at break even. So I didn't make any money. I didn't lose any money because I entered it right as it came below this range here. Takes this red, comes right back up, but I had to do a market order to get out. Didn't lose any money. But when I saw this, my first thought was, because I always analyze my losses immediately. I said to myself, two down, two up. Compound 3D. You should have waited for this to close to get confirmation. But because this was still below -100 and this had turned red, I was in the money here. I took that risk, but it didn't hold. Then it traded two up. I got back in, guys. I got back in. CCI 90-minute turned green. So now I see this as a two down, two up, two down. Don't like those type of trades, but CCI crosses back over now. It's back above -100. CCI is crossing above 0. I'm in this trade right in this range here. So I take this up. So because this is trading up, remember this is the broadening formation we drew earlier. I'm on my 18-minute candle time frame, and I see this. I was like, 3-2, it's got to take this. I drew this broadening formation down because in my view, again, I'm always thinking, guys, when I'm trading, I'm looking at this and I'm saying, if it's going to go higher to take this range, it's got to hold this level now. So I drew this two up to this range because this is the level this is the range we're trying to take out. So I said, if it's gonna go higher, it's got to hold this lower range broadening formation for this range here. So I drew that. It touched, crossed over. I'm saying, yeah, good. It traded back down. Guys, we're almost at our, and the other thing I'm looking at is, which is why we love multiple time frames. I'm looking at my 90. It went outside on the 90-minute right here. Came back in, I hesitated, formed this little doji, went inside, came back down, crossing 0. I took my profit. I got out of this range before the 90-minute flip. And this was our 90-minute flip here. Because you can see this coming in, guys, creating a little doji. I was done with Tesla. I did not try to short this. But I wanted you to see how this didn't work, why this worked, and why drawing that broad information helped me to see that this trade was likely not going to continue, right? So now you're trading inside 90, which I hate. And you had this move, potential opportunity here. Tesla's just hard to trade once it goes inside, so it never traded outside this opening 90 range. A lot of choppiness after that, okay? It's okay to just be done for the day, which is where I was. So I hope that helped. The market is not easy to trade, but you have to be able to see when your position is just wrong. So when I saw this, I thought it was good. Then I saw this was just forming a doji here on the 90. It came back up, hit this broad information we had drew from prior day, inside, 3-minute, crossing up. And it's like, yep, not gonna happen, not gonna happen. We're done. We're done with the short side. Okay, so you have to be able to talk to yourself. And the way you do that is you learn your stocks, right? So I know how Tesla trade because I trade it every day. Well, not every day. There are days where I'm just like, yeah, I'm not trading Tesla. If it's like inside, it's doing nothing. But be able to have your short list, understand how your stocks trade, understand your broad information pivots, know when the trend is over, and just keep moving. I love my CCI to help with my momentum, but I tell you, having those broad information, hitting those targets, crossing back over, just saying, yeah, I'm good, taking my money. The only time you see, because remember, you're going back inside the previous range. This was a 2 up. So, or actually it was an inside bar. So just understand that, okay? So now you have this 2 up, 2 down. I mean, you had this 2 down, inside, 2 down. I don't know what's gonna happen today. All right, so we're gonna pause there. we had a few stocks that were still gapping target. Let's look at our broad informations, guys. I'm sorry, our broader market. Remember, we're still inside month, so we can expect choppiness. Okay, at this like doji on an inside month. I'm sorry, 2 down month doji. Now we're inside this. I mean, literally inside the body of this, the body of that close. So expect the market to be choppy. I would not be holding anything overnight here, but let's just look at what we have. This is a very tight range, right? Today is the 8th. Is that today? Yes, that is. Today starts our new 3-day pattern. We have a 2 up, looks like a hanging man, and we got a 2 down doji on this 3-day. All that's saying, guys, is this is a tight range. We need to break out of this range. So let me just look at 2-day. Yeah, 3, 2 down. Today is a new 2 and 3-day chart. I'd like to see this go higher, right? But let's see what happens. Right now, the market is flat. Pretty quiet out there. Let's look at the SPY because we have to get outside these. Oh, sorry, just put the daily. We have to get outside this range, guys. This 3-2 range for me to see the market do anything lower. Maybe it goes lower, higher. Maybe it goes higher. But right now, it's just bouncing, not bouncing, but it's aggregating, moving between these two, and just in a tight range. Let's look at the SPY. Very similar, guys. Again, doji on the month, inside doji doing nothing. So continue to expect volatility. Let me just look at the VIX. Still above 21. All right, so the volatility or fear in the market, it still exists. Certainly not as high as it was, but gosh, guys, there's just no real direction in this market. Earlier we had some, let me go to my stock screener. Yeah, a lot of those have fallen off. Okay, I got Roku. Retail is still a little shaky. Let's look at Roku. Maybe we'll trade that one. We got a gapper on Roku. Let's look at Roku because everything else is really in a tight range. Tesla's gapping up. Roku and Tesla. We will wrap up here. I'll chart Roku for the vid. Let's delete all of that. All right, so some news on Roku. It's gapping up now. For some reason, it wasn't on my list early this morning. So something is driving this up. This is way old. Let's get rid of that. All right, so it formed an outside bar yesterday. All right, so we know we want to cover those outside bars. And we're going to draw those broadening formations. Let's get my colors right. All right, so we're going to draw those broadening formations. Let's see how I want to do that. All right, so we're going to draw that down if Roku comes back inside that range. Let's see. It's already above this daily range. Let me just blow this up so we can see it better. All right, so I'm on the 90-minute. So I know that if price trades below this range, which was yesterday's high, we look for a short, right? So we're going to draw that down. For this is actually a 3-day range here. All right, now higher, it's already above this range, this 2-day range here. So that's 98.24. See where else it's. All right, 98.02, perfect. All right, so we know it's inside this daily range here. All right, so needs to hold here. See where it's trading at 100. So if it gaps up and holds there, still good to go long. We'll see. All right, and then we're gonna go here. Got this outside bar here. A lot of outside bars. You can see all of the ranges here. They're just going to be difficult to trade if price action, because you got all these outside bars. Here's an outside bar. It's 2 down bar. Here's another outside bar. Here's another outside bar. This is where when I start drawing these ranges, guys, and they get really tight like this, all that's saying is these ranges are tight. And so we'll just want to be careful if price action doesn't blow through those ranges. So all I've done is I've taken these outside bars and drawn those broadening formations. And so we're now up here about 103. Roku is gapped up above 100. So it's already trading outside of this range here. That puts it inside this range, which is at 104.52. So it's got to take out all of this. So keep in mind, guys, Roku closed here. All right. It closed here. Can you see that green line? You're inside this range. And all we're saying is, if it's going to trade higher, it's got to take out all of this. So that's why I look back in history, because time does matter. And so it's going to trade above this, and I'm just creating these broadening formation pivots off these outside bars. So it's got to take out that range. It's a 2 down. Here's a 3. That's going to cover this. This will cover that. So I'm good there. And we got this outside bar. We have that covered. We have another outside bar that'll cover that. We have this outside bar about 106 if it continues, and then you have this outside bar about 106.71. So I'll just do a, because this is a daily high here, I'll just do that guy, and then you're looking at taking out those daily highs here, because at this point you're inside this big range here. Okay. So this is the way I would look at it. If price is going to go higher on Roku, then it's got to take out the 103. So it's trading above 100 now. So it's got to take out this range at 101, next 103, 105, 106.73, if it's going to continue. If it reverses though, guys, it's gotta trade back below this level, I think, for me to look at a reversal. So if it gaps up, comes back and trades back below this range, because now you're back inside the June. Because here, guys, we're back in May, right? So we need to come back inside the month. This is June 1st, right? So for me to take this short, if it gaps up like it is now, because again, we still have another hour and 20 minutes. So if it gaps up at the open, comes back below this range, so below 98, then I'll look for a short, right? You have a 3-2 here. Okay. I'll look for a short. This is a 3-2, gap up, short below 98, first target, second target, and see if it comes back in yesterday's range. So let's draw this, let's write this up. So we need CCI to support us, because remember, you're looking at my CCI here, guys. If this gap's above where it is, you're probably going to have your 90 above 100. If that stays above 100, you're probably going to be choppy trying to come back down. So just keep that in mind, okay? My video's gotten way long. I'm going to close it here. All right, so we're going to make our notes here. Long above, what do we say, 98? Long above 98. 98.24. So we're going to say long above 98. Yeah, we call it 99. CCI above. We're going to go, this is for you, Alex, plus 100 on 18-minute. Okay. So CCI is already above 100 on the 18-minute. So we're going to, if it holds, right? CCI trades above plus 100 on the 18-minute, because this is a gapper. This is going to be a kicker, guys. This is going to be a kicker, okay? So if it holds, it's going to hold above plus 100. We're going to look to go long. We're going to short it, though, below, if it comes back inside this range, right? So if it shorts back below 98, with CCI below plus 100 on 18-minute. All right, so what that means is I need CCI to cross back below 100, because right now it is above it on the 18-minute. It's going to gap up, potential kicker. I said kicker, potential kicker. It certainly could gap in reverse. But if this stays above 100 on the 18-minute, we're going to wait. All right, so don't be in a rush on these gappers. You can't be in a rush. But if it gaps up like it is above 100, crosses back down below 98, back in this range, we're going to look to short. But if CCI is still above 100, I'm just going to wait for that cross. CCI's got to give us confirmation. Otherwise, what could happen, guys, and we've seen it, right? Big red candle on the 18, it holds here on the 98 or even the 95, right? It could even just trade down and hold. This stays above 100. Market makers, put in a doji here. Trade down, go 2 up, 2 down doji, only for it to go 2 up continuation. That can happen, okay? So that's why I'm patient with these moves. I'm not trying to jump in on these gappers. When you have volatility like this, there's no reason to be in a rush. There is absolutely no reason to be in a rush. Okay, because remember, it's a 3 on the day. All right, so it's already above. You can see this. It's already, guys, look at this on the daily. It's already above this outside day. So this is a lot of congestion, right? A lot of congestion. So outside day, outside day, outside day, right? And so it's going to go 3, and here's your high, which we have covered in this broadening formation here, right? So that just means if it gaps up and hit these levels, guys, it could come back down. So just be careful. Don't be in a rush. We're going to use our CCI to help us with our entry. All right. All right, so we're going to end there. This is an hour video. This is going to be a long post. I've been trying to figure out how to get these vids shorter. Keep talking. I keep training. All right, Proverbs 21:5, the plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. Patience, my friends, patience. All right, we're going to end it there. Take good care, everybody.